Hey, watching Business Incorporated live on Channels Television. Coming up, Cameroon raised its cocoa production 4 times more as farm gate prices rise. Kenyan President William Ruto's fiscal policy is on the line as a judicial panel begins hearing of litany of petitions. Plus, oil prices over near 10-month high on supply concerns. Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets. Let's take a look at what's happening in Africa. There we see it's a positive sentiment right there with the NGX there. Recovery today, 0.88%. Yesterday, but intraday was down, and we see that investors are quite bullish at intraday. We'll see how the market closes today. South Africa index, 72,860 points, down 1.66%. A big drop there in South Africa. Let's look at North Africa now. We'll see Egypt up 0.70%. And we'll see the Kenya index there, 1.05% down. That was a close yesterday. Let's flip over to Middle East now. We'll see it's mostly mixed sentiment there with in UAE, Abu Dhabi and Dubai indexes marginally down there in Abu Dhabi. Dubai index is also down 0.24%. Other markets we track there, Saudi Arabia and Qatari index there sits 0.52% down at intraday and 0.16% for the Qatari index. Let's head on to London now. We have Juliana standing by right there. Well, we'll come back to Juliana right there. Let's take a look at what's happening in Europe now. We'll see right there in Europe, we see a lot happening with Google. That's the world's biggest search engine, so big indeed that competitors don't even stand a chance in the search market. Now the company has to defend itself in an antitrust lawsuit. Well, Lars Holter is with DW there, and he joins me right there from Berlin. Great to have you, Lars. So what are the charges against Google?
Yeah, hello, Ladi. Thanks for having me. So in broad terms, this is all about Google being way too big, pretty much holding a monopoly on the internet search market. To be fair, Google is such a strong player that merely searching for anything online is actually called to Google something by pretty much everyone on the planet. Looking at the numbers, around 91% of searches are conducted using Google, and that really doesn't leave much room for Bing or Yahoo or other competitors. The question now is, why is everyone using Google? Is it because they're so much better, or is it because Google is paying billions of dollars annually to be the default search engine on the iPhone or on web browsers such as Apple Safari or Mozilla Firefox? That is what regulators are actually complaining about. They say that Google has also illegally rigged the market in its favor by requiring its search engine to be bundled with its Android software for smartphones if the device manufacturers want full access to the Android App Store.
What is Google saying about all this?
Well, first of all, Google says that it faces a wide range of competition despite commanding about 90% of the internet search market. The company says that its rivals aren't only classic search engines like Yahoo or Bing, but that they include websites like Amazon and Yelp, where consumers can indeed post questions about what to buy or where to go. It looks like Google is starting off their argument by claiming that they are actually not too big. However, that of course doesn't even touch on the question of whether or not Google paid hardware and other companies for bundling its services, and that is essentially where the potential illegality of this whole case is. Google also posits that their search engine's growth stems from perpetual improvement. So pure R&D and staying on top of the game is apparently the reason why people are almost reflexively coming back to it.
And what are investors looking at today in the markets in Europe?
Yeah, staying with tech, investors will likely digest all the details about Apple's latest iPhone launch last night in California. The company introduced its latest product lineup, new phones, new watch, some powered by new and improved chips. Still all very, very pricey, so analysts will pore over those details, wondering if the hardware is good enough to keep fans buying. Other than that, we're inching closer towards Thursday, and that's when U.S. inflation data will finally come out. Everyone's hoping for clues on future Fed policy. Of course, that doesn't mean that we'll see all that much tomorrow. It could be a non-event after all. But until we find out more, it's safe to say that markets are on inflation watch.
All right, thank you so much. That was Lars Holter right there in Berlin. Let's take a look at what's happening with U.S. Markets now. See, U.S. stock futures started today quite negative as investors look towards the release of that inflation data that's coming out today. We're expecting U.S. inflation CPI data for August. Then we see the Dow Jones Industrial Average futures down 0.17%. We see the S&P 500 there down 0.16%. The biggest downer today, 0.21%. That's Nasdaq futures. Let's get a summary of yesterday's close now from our correspondent Maria Bird.
Tuesday, as the Dow Jones was down at 0.05%, the S&P 500 down at 0.57%, and the heavy tech Nasdaq down at 1.04%. The tumble of Nasdaq had many concerns as Apple had its big day and event announcing the iPhone 15, as Apple has been struggling quite a bit over the last few weeks. It is also clear that investors are watching to see what will happen with the inflation report that are set to be released on Wednesday. This is going to clearly set the stage for how the U.S. will move forward with the economy as oil prices are rising, which means there could be some inflation concerns. Investors will be watching to see how this will impact the U.S. economy.
And that's our correspondent, Mary Baird, there, giving us the summary of yesterday's close. Now, let's head on to Asia now. With Asia-Pacific markets fell across borders. Investors assess key economic data out of Japan and South Korea. South Korea's unemployment rate in August, that came in at 2%. It's lowest since June 1999. So we see behind me there, we see the Nikkei, that's up 0.21% to close. The Kospi down marginally, 0.07%, while the HSI index, 18,000 points there, just holding that level by a hair's breadth. And we see Shanghai Composite, it's mostly red there with ASX 200 in Australia, 7,153 points, 0.74% down. All right, let's take a look on what's happening with oil prices now. Get a check there. We see oil prices extended to 10-month highs today, driven by expectations that crude supply will remain tight for the rest of the year. Saudi Arabia and Russia's extension of 1.3 million barrels per day of crude oil production cuts, that's the end of this year, will lock in a substantial market deficit through the fourth quarter. That's according to the International Energy Agency. We see the benchmark Brent futures that rose by 57 cents to $92.63 a barrel, while the US WTI crude that gained 57 cents at $89. Definitely nearing that $90 level. We'll see how prices close to the end get into tomorrow. That's for WTI and Brent. Let's get a check on the metals market now. We'll see gold prices held near two-week lows today as higher U.S. bond yields weighed on the bullion's appeal, while traders kept their eyes peeled for U.S. inflation data that could shape the Federal Reserve's interest rate path. Spot gold is down about 0.05% to $1,912 per ounce there. Haven't touched its lowest level since August 25th at $1,906 on Tuesday. U.S. gold futures edged down just under flat to $1,934.80 per ounce. Markets are awaiting the U.S. Consumer Price Index with rising energy prices expected to push headline inflation figures even higher. All right, let's get a check on what's happening in London now. We have Juliana standing by right there. Great to have you, Juliana. So we see the big news today now. BP boss there, Bernard Looney, quits after the board misled over relationships. What are we hearing about this?
Yeah, good afternoon, Laddie. Pretty shocking development that we first heard of last night. There was a very brief statement put out last night by BP, the oil major, to shareholders. I know we don't have much time, but it's worth going through a little bit of it. They said during a review, which began in May 2022, after they were tipped off by an anonymous source about Bernard Looney's alleged relationship with somebody within the firm, I believe he was brought into into the probe. He admitted to a certain extent some of the issues that were put before him. However, more information came to light, which were brought to Mr. Looney, and he decided to resign with immediate effect, which is, again, a pretty shocking story because he has been at the firm for over 30 years, 3 decades. He started off when he was very young in the early 90s, of course, rising up the ranks to becoming Chief Executive Officer in 2020, where he oversaw some pretty significant shifts in BP. Of course, there was the spike in the energy markets, the war in Ukraine, BP's swift exit out of Russia, and COVID-19, and of course the extraordinary profits going in front of protesters and trying to defend BP doing exceedingly well when, of course, the rest of the world weren't doing so great. So yes, it's a huge story, but pretty muted reaction in the city. BP share price only dipped about 0.08%. I think that's got a lot to do with Auchincloss. He is a very formidable CFO, became Chief Financial Officer at the time Looney stepped in as Chief Headhunter. So I do believe that shareholders do believe that the transition is going to be smooth. But yes, nevertheless, it's a pretty shocking development for the City of London, and the investigation into his behaviour is ongoing.
Right, I guess we'll keep tracking that story now, but we know Apple is trending from last night into today. We see the release that iPhone 15, it did go up in price. How are UK consumers seeing this? And I know you're an Apple fan too. How are you seeing this?
Yeah, I'm an Apple fan. Got my Apple here.
Right.
It doesn't take the best pics, but apparently this new iPhone 15 range is going to have a much better camera, lots of pixels, and also as well for people who have been struggling, if you've got a newer iPhone 14, then you'll know that, of course, the USB charging system isn't compatible with other phones. Wasn't because of Tim Cook or Apple bosses. I think there are some new laws within the EU that is going to make it mandatory for all phones to basically have the same. Good news. Of course, the launch is always going to be exciting, isn't it? Lots of exciting gadgets and lots of exciting announcements. And, Apple didn't fail to impress. The only issue with the iPhone 15, of course, is the price. It is going to be incredibly expensive when it hits the shelves on the 22nd of September. I don't know if you're going to be able to buy it from an Apple store, but you certainly will be able to purchase it online. If you want to go for the top of the range, and I know you only use the best stuff, it's going to cost you £1,900. Now, right. I don't know what exchange rate we're using at the moment.
Oh, my goodness.
That's nearly 2 million naira for a phone.
Exactly. I don't know if I can afford that, really. It's crazy. Well, we'll see how
you can definitely afford it, laddie.
Maybe. We'll see. But how's the market in UK reacting to this?
Yeah, the market's pretty low. Of course, I spoke with Innie on Business Morning this morning about the pretty abysmal GDP figures. We saw a contraction of 0.5% in the month of July, ripping off all the gains we got in June. Recession is certainly the buzzword as we enter into Q4. Well, we're in Q4 now. So the FTSE All-Share is down. It's down 0.40%. The FTSE 100 is down too by 0.40%. And the FTSE 250, the domestic market, that's down by 0.5%. In the currencies market, the British pound continues to trade down against the US dollar by 0.23%. It's also down against the euro by 0.04% and down on the Japanese yen by 0.05%, laddie.
All right, thank you so much, Juliana. Always great having you update. Thank you. All right, still ahead on the program now, we'll drill down on H1 earnings of top banks in Kenya. That's next. Do stay with us. And in August, Kenya's top 9 banks, ranked by asset size, unveiled their financial results for the first half of 2023 against the backdrop of soaring inflation rates and a depreciating currency. For details now, joining me is Eric Mukaya, founder Mwango Capital, joining me right there in Kenya. Great to have you on the show.
Good to have me. Thank you so much for having me.
Fantastic. So how has the inflationary environment in Kenya impacted the H1 result of the top banks right there in Kenya?
So because inflation has been a bit sticky above the central bank rate of around the target of around 7.5%. Because of that, the interest rates have also been high. So that means that banks are benefiting a bit from taking a bit of higher interest income. But at the same time, they're having to pay a bit of higher deposits. The good thing is that interest rates, at least the interest income, has kept above the interest expense. So banks are still reporting good profits. I think the major challenge, though, for banks in the first half of the year is mostly non-performing loans. It seems like there's a lot of worry in the market around the non-performing loans, especially of the big banks. All the banks that are listed, except two, raised their provisions for the first half of the year. So that means some of them are a little worried on how people are coming out of COVID. The biggest worry is around the KCB, which is a third of the non-performing loans in the industry. So I think quite significant there. So I think because of that kind of worry, you find that KCB share price is down almost by half in the past 1 year alone. So lots of things to pick around the report, but I think the major takeaway is that banks seem to be generally performing well, even though there is a bit of worry around their asset quality, and that means their non-performing loans, which is translating a bit to depressed share prices at the Nairobi Securities Exchange.
Right, the banks seem to be doing pretty well, at this time. But how is the top line growth among the top banks?
I think top line growth is good across the banks, especially let's say the big banks. Equity, they're still growing. Equity and KCB themselves, they just completed getting in the acquisition of TMB into their fold. So I think pretty well, much good performance across board. I think the challenge is a bit on the profit side. As I said, provisions are ticking up a bit, and some of the expenses across the banks are also increasing slightly. So generally, though, banks are doing well, especially those ones which are not headquartered in Kenya. Say Stanbic, the profits are up around 48%. So generally doing well, I would say. So maybe something else that you would pick up from the earnings is especially that banks have been reaping the benefits of the issues around exchange rates. I know in Nigeria you've been having issue of the exchange rates. In Kenya, the issue is basically that people cannot access dollars. And because of that, the demand for dollars is way higher than the supply. And banks have been benefiting by having wide spreads across that. So you could tell from across most of the banks, they were reaping the benefits of those kind of good spreads around that. So non-funded income was significantly up for across banks, and that's boosting them. But that may come under pressure in the second half of the year, maybe as the shillings a bit, the depreciation of the shilling stabilizes a bit in the second half of the year, as we expect it to.
Right, Eric. Everyone's looking for the dollar at this point. But what other factors contributed to Kenyan banks' profitability in the first half?
I think the first half is mostly, as I said, driven by really nice spreads on non-funded income, especially the FX income. The good profitability is also expansion to regional markets, as KCB and Equity Bank continue their battle on which is the very biggest bank in Kenya. So they're way above the 1 trillion Kenya shilling mark in terms of asset size. So just flexing their muscles as they go to East Africa. Some of them expand to West Africa and all. So I think some of them have also been able to keep their cost expenses lower, even as the economy remains a bit challenged. So they're positioning themselves for the second half of the year. So I think generally in the economy, people are worried about the Eurobond in Kenya that is maturing next year. So I think because of that, and what and uncertainty on what the government would take in terms of approach in dealing with that, most banks are playing a bit defensive in the second half of the year, with worries around non-performing loans. So the second half of the year may be a bit challenge for some of these banks. But as I said, the first half of the year mostly benefiting from really nice spreads on FX income for most banks.
And what are you expecting for the Kenyan shilling? We know most currencies in Africa are pressured at this time. What are you expecting for the second half of 2023?
To be honest, it's not a very good outlook currently. The shilling is around 144 on the official rate, something like that. Should be around 150 by the end of the year, I would suppose. The depreciation is the rate of depreciation is decreasing as kind of the shilling finds its proper rate now. So I think the most people are benefiting is anyone who's lending in dollars, and anyone who's also lending in who doesn't have dollar-based loans on their balance sheet, so to speak. So I think that's a challenge for a lot of people. The thing that you're seeing in the market is there's a bit of ease around the issue of access to dollars. People are not complaining as much as last year. So it seems like people are getting a bit more of their hands on those dollars. So I think for the second half of the year, I would say there's a bit of pressure with the government also having to raise a few dollars to pay one of the government policies that they have in place. So that may put a bit of pressure on the Kenyan shillings. But I would expect it to stabilize just above 150 by the end of this year.
All right, we'll keep watching and see how the Kenyan shilling there performs in the second half. Thank you so much. That was Eric Makaya, founder, Wango Capital. Thank you. Meanwhile, still in Kenya now, see President William Ruto's fiscal policy is on the line as the judicial panel begins hearing on litany of petitions seeking to block his signature tax hikes, though unpopular domestically, but key. That's what the government's arguing to avoid debt distress. Fighting to keep a raft of levies, including doubling value-added tax and fuel, is one of many battles Ruto faces a year into his tenure leading East Africa's most developed economy. The others include burgeoning debt and rising cost of living and a plunging currency, high unemployment, and a $2 billion Eurobond maturing in June. And in July 2020, South Africa's manufacturing production showed promising growth, recording a plus about 2.3% increase when compared to July 2022. Notably, this upswing was driven by the robust performance of chemical products and rubber. Head of South Africa Economic Research Standard Bank, Dr. Elna Moorman, says it's a relief. However, load shedding remains a challenge. Take a listen.
The year-on-year expansion in manufacturing production for July is indeed a relief. However, we need to take into account that there was a month-on-month decline. The more important context is that this is still about 15% below peak production in the manufacturing sector. And the same applies more broadly to the economy. In other words, there is relief about the extent to which the private sector has responded to some of the key constraints, including the electricity shortfall. We've seen substantial investments from the private sector in electricity generation as well as storage capacity, and this is why economic activity is remaining quite resilient relative to the extent of electricity supply. But again, the important context is where we are relative to the previous peak. If manufacturing production is still about 15% below its previous peak, it has obvious implications for example, capacity expansion and employment in that particular sector of the economy.
Yeah, that was Elna Moorman, head of South Africa Economic Research at Standard Bank. Well, Cameroon has announced a significant increase in cocoa production over the past two seasons, with figures showing that the crop in 2022-23 season was 681 tons, almost 4 times higher than the 182 tons recorded in the 2020-2021 season. Earlier this week, Cameroon raised its farm gate cocoa price by 25% to around 1,500 CFA francs per kilogram. The increase in production comes on the back of a new business model implemented by the National Cocoa Board. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. I'll catch you again tomorrow.